Hey everybody, Bruce Michael, Key Level Trader here. Just sitting here on a boring Monday. Made one trade so far, made $35, and just sitting around watching stuff. I came up with Medco Health Solutions on the scanner. Just popped up. Pretty much just falling apart here. As you could see, it's this one. This is a 20-minute candle. Let me go into fives here for a second. All right, so what's going on here is that some news came out about some kind of merger or something maybe not happening. That doesn't really matter to me. But here's the thing: when people don't realize that when these stocks start to fall like this, the people over here right now, these guys are bidding because that's their job for the most part. These guys are market makers of some type, whether it be a computer driven or an actual person. These guys are in here buying shares of this stock as it falls. So when you put an order and sell it at market, you're selling it to somebody, and the question is, who is that somebody, and what are they going to do with it? Who wants to buy a stock that's falling, right? But their job nonetheless is to put some risk up and bid for these things, and people are selling into those bids, and you can see what's going on here. At some point in time, when the selling pressure stops, these guys will then rebid this thing back up again, which is the cause of a stock kind of going up in waves, up and down in waves, right? They go up and down in waves generally, as far as the price is concerned. So when the selling gives up down here, then these guys got to start going back into the market because they're long. They're buying at these levels here, and they're long a stock that's falling. So they don't want to do that. So what they'll eventually do is bid this up and start to move it higher. And a lot of people buy these reversals because of that reason, because these guys have been taking shares all the way down. This is a lot of volume here. I'm not saying every single share that went on in here or that got traded in here is a market maker, but there's a lot of guys in here that are market makers, or again maybe computer driven, that are actually buying these shares. So they need to somehow get themselves even, or at least lessen their losses if they are taking them, which I would imagine in this case they are, because they've been buying all the way down here. So eventually they're going to want to pump this guy back up to see if they can recoup some of their losses. So I just wanted to go over that one little point with you. I don't think people realize that that's how the market works with regard to market makers. I've always said, so many people look at market makers as though they're some kind of enemy to the day trader or even to swing traders. But generally speaking, these guys are your friend, they're not your enemy. Because again, when you want to short this thing, who you're selling it to? It's a market maker. And on the other hand, when you want to buy it, who you're buying it from? Most likely it's a market maker. So don't always think that the market makers are guys that you don't want to do business with, because the fact is that without them, I'll tell you what, someday I'm gonna record a session of after hours trading, particularly in the afternoon. After hours news, you will be amazed at how hard it is to trade that because of the lack of market makers in the market for that particular stock. Anyway, that's a story for another day. Anyway, so here's some of the stuff that I've been watching today. We had Abercrombie and Fitch rallied up to first level up, nice consolidation right here, broke out, retested nicely, held really nice there, and then moved on up. I did not take this. It does move well, by the way, but I did not take this because these guys here that were buying this thing as this big gap down here, and they were buying here. A lot of people buy thinking it's a great bargain, and next thing you know, it goes lower on them. So when it tries to rally back up, very often you'll see that people try to get back out even. 41.53 was the high there, and that is pretty much about where it stopped moving up here. 41.49 was the high, so that held, and then the breakout occurred after that. Anyway, I missed it. Then we have GMCR, which is an example of, particularly today, volume not particularly heavy. It gapped up big the other day, so it has some room to move up. Unfortunately, this stock, unless its volume is really heavy, it trades really ratty. So the way you see a stock trading is the way you're going to see it trade going forward. So if you buy this long, there's a pretty good chance, especially if you're somebody like me who has a quarter to 1/2% stop in, good chance you're going to get stopped out. And you can see this thing poked through this level, third level up 3 times, and then came back down. So if you did buy this, or if I did buy this, I would have been burnt 3 times. So an example that they don't all work out, but you got to be careful and you got to be choosy which ones you are going to trade. Okay, back to Gilead. This was a nice breakout, now consolidating here. This is something I'm going to watch, although again I don't really like to take that second consolidation. Sienna, nice consolidation at level 1. Unfortunately the volume, or whatever reason, I'm not really sure why it didn't come up my scan, but I didn't see it. Netflix gap down, don't know why. Again, news, I don't really pay too much attention to the news until after the fact. But these levels, first and foremost, you may have heard me say this before. If you haven't, I'll say it now. They are first and foremost areas of support and resistance. So in this case, came down, it supported, and then you can see what happened. Some news came out and it did rally, and now it's meeting this resistance up at this first level up. We'll call it the first level up, right? Again, between here and here is 1%. So between here and the next level up is 1%. So your first target on this would be 1% if you did take this long. Again, Netflix moves fast. If you get it right, you can make a lot of money in a hurry. If you get it wrong, you can get burnt in a hurry. What else we have here? I was looking at RIM earlier this morning. RIM gap down, consolidated nicely at this first level. 1% gain there. Another one I passed on. Truth is, I'm using this first level. I just introduced this over the weekend, and so I'm kind of just testing on it today. I'm really not interested in actually buying or selling against it. ARMH, first level down, nice consolidation, broke down and is now consolidating just below. Second level down, which is now acting as resistance on the way back up. If it tries to move back up, that's resistance there. Not a lot of stocks is the way I'm doing this, because I don't really have much to do here today. There's hardly anything showing up in my scanners. Pretty much a boring day here so far. Boy. Now this is something, I mean, if you just decide, you're going to short this, it may work out for you, but there's a chance, this high here is 59.12, the blue line is 58.54, so you're talking about 60 cents plus there between those two. But obviously if I did short this would have been working out pretty well right now. And the key was to take it short here. Again, I'm talking here, making this video, so I missed this. And you can see how cleanly Baidu is trading there. This is as ugly as it gets right here. So if you see, if you did this and you were looking at your scan and it shows you Baidu here, this is not something that you want to trade. I mean, there's just no trend going on in here. This is just chopping around, and that's something you totally want to ignore, which I've been doing. So what's some other stuff I want to talk about? So what are these levels? Basically what these levels are price changes from the previous day's close. I've seen a lot of emails. I've seen a few comments on the videos asking me what the levels are. They're basically price changes from the previous day's close, and they are based on a Fibonacci numbering sequence, and they're extensions by the sequence itself. So the sequence is 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, so on and so forth. And each one of those numbers, if you add, for those of you that are not familiar with it, like if you add 3 and 5 together, what do you get? 8, right? Well, that's the next number in the series, 8. But if you take 3 and multiply it by 1.618, you roughly get 5. If you take 5 and do the same thing, you roughly get 8. That is how I base these extensions. So why do they work? That's another whole philosophy, and I don't want to really get into philosophies, but I believe they do work. You've seen them work often enough so that you know that they do work. What I'm going to do is, at the end of each week, I'm going to make videos that pretty much captures the best setups for the week, so that you guys can see how often these trades do present themselves as opportunities. Okay, real quick, let's go over to Medco Health Solutions as this continues to unravel. So Medco continues to unwind here, and again, if look at this. I mean, this breaks down through this level, and where does it stop? It's amazing the way it stops there. Rest assured that you will frequently see, if you were to actually start trading this method, you will frequently see stocks move to these levels, at least pause there before continuing on or reversing. Right? The volume trends will tell you whether or not the reverse is going to occur or not. You don't always get it right, but you get it right more often than you'll get it wrong. Okay, so that's all I wanted to show you today. I'm going to end this video here. If I do see something set up, I will record it, particularly if I do take the trade. But right now, I really don't see a heck of a lot going on. Right now, on all 6 scanners, there are 3, 6, 10 stocks. All right, that's not a lot, so very slow day. All right, so that's the video for today. Hope you enjoyed it. Hope you learned something from it. I know I was jumping around a lot here, but hope it was entertaining. And I will see you in the next video.